Hi, welcome back to my channel. Today we are going to explore a very crucial topic, that is investment in government securities, specifically infrastructure bonds. You must have heard a lot of hullabaloos on social media, on Facebook, on TikTok, on YouTube, on your WhatsApp groups. If you discuss finances in your groups, you must have seen a lot of hullabaloos and a lot of excitement whenever an infrastructure bond has been floated, or whenever CBK floats an infrastructure bond. So today in this session, I'm going to take you through what an infrastructure bond is, why you need to invest in it, and if there are any disadvantages. I'm going to share that with you. I know I did a video telling you to invest in the reopened infrastructure bonds, but I did not go in that video to tell you what really is an infrastructure bond and why should you invest in the infrastructure bonds. My name is Berlin. Kindly press the subscribe button. Press that subscribe button before you forget, so that YouTube can push out this video to more people. But most important, so that whenever I upload any video, you do not miss out on the content. Because trust you me, anybody who loves money, anybody who appreciates money will definitely appreciate whatever content I am uploading. It is quite beneficial. You will never ever want to miss out on them. Back to our infrastructure bonds. What's an infrastructure bond, or what are government securities? Now, every so often, the government needs to borrow money, CBK needs to borrow money from the public to finance its budgetary allocations, to finance its infrastructural developments, the roads that they are constructing, the houses, hospitals, whatever, all those infrastructural developments. The government needs to borrow money. It can either borrow money from IMF, it can borrow money from locally. Now, when it borrows money locally, it floats or it sells certain papers, quote unquote. These papers essentially tell the public, asks you and me to lend the government money, to lend CBK money. Okay? So whenever CBK has come to ask for money from the public, including banks, insurance firms, money market funds, and all those other investors, whenever CBK comes to borrow money from us, we place bids. Bidding means we are telling CBK, I would like to invest this amount of money if it's treasury bills over this duration of time. But because today we are specifically tackling infrastructure bonds, I'm going to limit this video to infrastructure bonds. I have done a video on treasury bills. I'll give you a link on the description box. If you missed out on that video, please, you can have a look at it. Today we are going to specifically address infrastructure bonds. So now, every so often, CBK comes to the public and requests for money so that it can use this money for infrastructural developments. Now, there are certain advantages of infrastructure bonds that you will miss out on other government investment vehicles. Okay? Why would you want to invest in infrastructure bonds, or what are the advantages of investing in an infrastructure bond? Have you subscribed? Anyways, infrastructure bonds carries with it security, stability. What does that mean? The chances of the government defaulting in paying you back your money is very negligible. It's almost non-existent. Actually, they are described as low risk. They are the lowest risk investment vehicles that you have around. Okay? So they are safe. Infrastructure bonds are safe. They are safe to invest. It's a safe investment net. Secondly, infrastructure bonds are more often than not long-term papers. So you have an opportunity to have a safe investment in a long-term investment vehicle. It takes away the burden of having to make a decision. Should I not invest? Where do I put my money? Once you have invested in an infrastructure bond for a long-term paper, say for instance, you take a 15-year paper or a 17-year paper like the one which has been reopened. For those 17 years that you'll have invested your money, you sit behind and you wait for the government to be paying you coupons every 6 months. So it takes away that burden of having to keep making investment decisions on where to deposit or where to invest your finances, because they are long-term investments. Infrastructure bonds are tax-free. Infrastructure bonds are tax-free. Any interest you earn on those papers or on those investments are not subjected to any tax whatsoever. The papers which have been reopened now, we are earning interest at 17.9%. That's roughly 18%. Tell me where you'll invest money and be guaranteed of earning 17% every year, and you are not doing absolutely nothing. You're not doing anything. You're not handling any stuff. You're not following up suppliers. You're not following customers to pay you. You're not paying rent. You're not dealing with Kanjo, City Council. You have just invested your money and then you sit back. There's no KRA that is after you for your taxes or your tax. Yani, there's no staff that you're monitoring to produce. You just invest and then you sit back and wait for your coupons. They are tax-free. Another advantage or another reason why you need to pick up or why you need to invest in infrastructure bonds is because they are a good source for building wealth. You may not be having the 1 million to invest now. You may not be having the 10 million to invest now. However, you can use them to build up wealth over a period of time or over a duration of time. The minimum investment for the infrastructure bonds and even the treasury bonds is 50,000 shillings. So with just 50,000 shillings, you can start your journey towards being a millionaire. Remember, these are long-term investments. So how can you achieve that? Whenever the paper has been floated, you deposit, you buy what? 50,000 shillings, and then you accumulate. The next time another one is floated, you buy another 50,000 shillings. In between these papers, in between this infrastructure bond and the next one, here, in between, you can be accumulating your finances in a money market fund or even a savings account, pending another auction of another paper. And when another paper is auctioned that is attractive to you, you can take your monies from the money markets or for your savings account and buy this paper. Okay? So when you keep accumulating these 50,000 shillings, when you keep buying them over time, you will become a millionaire when you hit the million mark. It's possible. You just need to be consistent and you need to be intentional. Whenever you are paid coupons, you can start compounding. You can take the coupon that you are paid on your 50,000, invest it in a money market fund, continue topping up until it gets to another 50,000 shillings, so that whenever another paper is issued, you buy. As you continue buying and you continue compounding, your wealth is going to grow. Your wealth is going to grow. Every investment needs some capital, and so your capital is going to be the amount that you save for the purpose of investing in the infrastructure bond. And I'm speaking specifically on infrastructure bond because these are tax-free investments. Infrastructure bonds, just like treasury bonds, can also earn you passive income. Passive income is income that you earn without actively participating in the actual generation of that money. So with infrastructure bonds, all you need to do is deposit, is buy, invest. Send your money to CBK. And then that is all that you need to do. Every 6 months, CBK will be sending you your interest or your coupon on investment, your return on investment. So they are a good source of passive income. In fact, retirees, when you're approaching your retirement age, you can start accumulating these infrastructure bonds. And because they are long term, they will serve you for a very, very long time. Okay? Infrastructure bonds, unlike treasury bonds, this is another advantage, have what we call a redemption structure. A redemption structure. What's a redemption structure? When you take up a paper for say 10 years, when you take up a treasury bond paper for 10 years, you'll have to wait for the 10 years to receive back your principal. Or you can go into the secondary market and sell your paper. You can offload it to the secondary market. Unfortunately, that will come at a cost. You're going to have to offload it at a discount. The other alternative, which is a last resort, you can go back to CBK and rediscount your paper, rediscount your investment. So CBK will pay you back whatever amount you had sent to CBK. But because this is not encouraged, it comes with some punitive measures to discourage you from going back to CBK to ask back for your money. Because washajenga barabara, whatever amount you have given them, they have consolidated it and used it in the government project. So when you keep going back to CBK to ask for your monies, itatoa pizo pesa. So to discourage the public from going back to CBK to ask for money, they discount or they apply some quote unquote some penalty on the amount that you'll be paid back. Okay? Infrastructure bonds, just like treasury bonds, carries with it predictable returns. You can budget using those monies, because if you're supposed to be paid on 13th of May, your money hits your account in the morning. In fact, you will get the notification a day earlier or 2 days earlier that your money is being processed. And then on 13th of May, your bank will send a notification confirmed you have received, your account has been credited. Okay? So they offer reliable cash flow. Infrastructure bonds also offers portfolio diversification. Portfolio diversification is where you have different investments with different returns, but most important, with different risk levels. You can invest in stocks, but stocks carries a high risk. You can invest in money market, they have moderate risk. You can invest in circles, they have moderate risk. You can invest in forex, they have high risk. Okay? And the government papers, the infrastructure bonds, or even treasury bills or treasury bonds, they carry with them low risk. So it's a good investment vehicle to balance out your risk. Portfolio diversification. All right? Now, are there any disadvantages of investing in infrastructure bonds or of investing in government securities? Definitely. There's nothing which is always very good without any disadvantages. Yes, there are disadvantages. The first disadvantage, the liquidity. They don't have a good liquidity. Well, I will not say they don't have a good liquidity per se, because when you go to CBK, you'll get back your monies, or when you go to the secondary market, you will get back your money. However, it will come at a cost. So I will not classify them as liquid assets. In fact, in my portfolio, I have classified them as my fixed assets. I am not liquidating them, because liquidating them comes at a cost. And anyone who is financially aware, anyone who is financially literate, you'll want to avoid those costs. So have them as your fixed and or long-term assets. All right. Another disadvantage of investing in infrastructure bond is that they offer low returns. If you are to use those monies to buy and sell goods or to set up an hotel or to farm, it's possible you could make double that amount within a shorter duration of time. Or if you are to use that money to trade in stocks, and you have, assuming you have the full knowledge to trade in stocks, you could make more than the amount you'll be making in infrastructure bonds. However, remember, high returns, high risk. So in as much as they have low returns, infrastructure bonds have relatively low returns compared to other investment vehicles. They also carry with them low risk. And you need that low risk to balance out your portfolio. Infrastructure bonds does not cushion you from inflation risk. What do I mean by that? Had you invested 1 million shillings 4 years back in a 15-year paper, by the time you'll be getting back this amount of money, your principal, say 15 years later, depending on the redemption structure, that 1 million will not buy you what 1 million would have bought you by the time when you are investing. So they do not cushion you on inflation risk. So how do you navigate that? How do you mitigate that risk? Whenever you're making any investment decision, you need to identify the risk and be able to mitigate those risks before you put your money in that investment or before you release your money. So how do you mitigate inflation risk? By reinvesting your coupons. By reinvesting your coupons. I will do another video to demonstrate this to you, but if you invest 1 million now and you reinvest your coupons, all your coupons, 3 or 4 years down the line, you could triple your money. You could land at 3 million shillings by reinvesting, so that you take advantage of the compounding effect in just within the government securities. So once you have compounded your monies until your initial investment has doubled, it has tripled, it can now multiply by 4. Now you can start enjoying your coupons because you have already taken advantage. You have already cushioned yourself against inflation. Another disadvantage of infrastructure bond is they do not cushion you from interest rates increments. What do I mean by that? When you invest now at 12% and then the interest rate increases to 23%, 3 or 4 years down the line, you will continue earning 12%. And that's a disadvantage to any investor. So how do you cushion yourself from that? You reinvest. Whatever payment, you reinvest. When the rates increase to 12%, you reinvest. You keep topping up your investment in the bonds such that your net investment, when you sum up the coupons you are earning from all the papers you have invested, it averages up to the current market of 23%. You can also choose to offload the low risk papers, low interest papers, and top up and invest in a higher paper. Whenever there's a risk, you have to find out how to mitigate that risk. So all said and done, infrastructure bonds are quite beneficial. They are a must-have in your investment portfolio. They offer you security. They are tax-free. They offer steady cash flows. You can use them for portfolio diversification. Now, one more thing that I forgot to mention, another advantage. Infrastructure bonds or even the treasury bonds, you can use them as collateral if you want to borrow. The government, CBK, will never lend you money. However, you can use your investment with CBK. You can use your treasury bonds. You can use your infrastructure bonds as collateral or as security for your borrowing in your circles, for borrowing in your local commercial banks. So infrastructure bonds are very, very important. They may not offer the highest rate of return, but like I have said, you can use your coupons to compound, to reinvest and recompound, so that ultimately at the end of the day you have your wealth grows. All right? Now that you are aware, now that you have the full information as to why there's a lot of excitement in the auction or in the reopened infrastructure bonds, have you placed your bid for the paper? If you haven't placed your bid for the paper, why haven't you placed your bid for the paper? Leave me a comment in the comment section. Do you have a CSD account? If you don't have one, what are you waiting for? Why don't you have a CSD account? Why don't you have a CSD account? Do you need any help? Leave me a comment in the comment section. Are you struggling with placing your bid? Leave me a comment in the comment section. I'll certainly come back to you. And then finally, kindly press the subscribe button, like the video, and don't forget to share with your friends. Till next time, bye.